the crypto market in the last 12, 18 months, very similar to the dot-com bubble. If when you put all your eggs in a basket, maybe the first one works out, you make a fortune, but eventually you're going to hit one that's wrong, and you can't let that wipe you out.
If you don't understand what you're doing with leverage, you get wiped out, and you should get wiped out.
Buy what everybody's sold, not what everybody's buying now.
Crypto is not yet a real asset class because it hasn't been regulated yet. So for all the excitement about it, and one of the reasons I'm long, certainly WonderFi stock and 32 different crypto projects, is that I believe over the next 2 to 3 years we will get regulation, and then finally we can get institutional participation. People forget that 70% of the world's wealth is tied up in pension and sovereign wealth funds. And so if they're not allowed to buy the asset class, there's no underlying bid. And that's one of the reasons we can't get crypto past $24,000. It's really hard because there's not really a large constituency that's permitted to buy it yet, particularly Bitcoin and even Ethereum and even USDC, probably the three most popular right now. And so if we do get regulation first, it'll probably happen in stable coins because that's been very volatile lately, and there is policy on the table in the Hill, bipartisan policy that's being contemplated as early as next September, which is not far away, just weeks to be looked at. And if not, it'll be after the midterms, but that's coming first. And then of course, it'll be on to Bitcoin and others, whether they're allowed in an ETF. But that's the upside. That's why you participate. But to say that, it's a real asset class, it's not there yet. It's still nascent, it's tiny, but it doesn't mean you shouldn't invest. You should be ahead of when it's finally made a real asset class because its price will materially appreciate. That's my investment thesis.
Crypto's the same. It's even got a faster, steeper curve over time. More and more people are flocking to it, and the prices are down 80%. Well, between 50 and 80%. So these are the times where, let's say there's another potential 50% downside, let's say, because crypto is very volatile. What is the upside? Usually when you get to this kind of oversold levels, so I use stuff like the 5-year moving average, you find that the upside is 10 to 20x. So you've got a 0.5 downside, 10x upside, right? These kind of things don't happen many times in your life. So if you do have a bit of cash, buy what everybody's sold, not what everybody's buying now. And everybody's buying now. If we're talking about Dubai, people are buying property. Okay, that's been a good trade, but is it likely to generate 10x? No chance, never. Well, not in 5 years, not in 10 years, maybe in 20 years. So, or longer. So those are the opportunities I'm really looking at.
I was just going to say, from the context of an investor, not any one specific blow up, but over the last 90 days, we've had catastrophic failure in all kinds of different business models, from stablecoin to platforms that do lending. I mean, this is actually a good thing from this perspective. I mean, what's occurring here is the experimental business models, or what I would call, without showing any disrespect when I say this, but just idiot management teams that have never had any experience with leverage, because leverage has destroyed platforms long before crypto, whether it was stocks or bonds or real estate. If you don't understand what you're doing with leverage, you get wiped out, and you should get wiped out. And it's a very important learning experience for the market, and it scrapes the patina of idiot management out of the ecosystem. And it leaves the remaining companies much stronger. And that's the important part. When a Luna gets wiped out, an algorithmic stablecoin, it's a good thing.
Yeah, but for me it would be much, much lower. Like, honestly, 10,000 would be very good in terms of washing out a lot of the weaker hands. So for instance, I think there's a lot of investors, and if you look at Bitcoin right now, we just went from 69,000 to 17.5. And I still didn't get the sense, and you might agree with this, I don't know, but I didn't get the sense that people were like giving up on Bitcoin, right? And in a bear market, that's the kicker, right? If you go back to 2009 when the stock market bottomed at like 6,600 on the S&P or whatever it was like people just didn't even open up their portfolios anymore. They were like, I'm not even going near stocks anymore. But you don't have that in crypto yet, which to me says you gotta go lower in this bear market if it's a true bear market. And so I'm in the camp that 12, 13,000 is the high end target, but in all fairness, it's very likely that the powers that be, the psychological breaking point is probably that 10,000 level. So I would say that you probably have to go even below that to really flush out all of the weaker hands before you get that final, bottom being put in. And I would just point to this, is that I think we could agree that the crypto market in the last 12, 18 months, very similar to the dot-com bubble, if people read up on the dot-com bubble. And remember, Amazon lost 95% of its value. It went from, I think at the time, $115 to like $6.50. And then it went to $3,500. Like, think about from $6 to $3,500, what type of X that is. That's like hundreds of, 100X or whatever it is.
Yeah.
So you have to think that, Bitcoin could easily go down 95%, and then it could go up the same amount as Amazon if it proves itself to be that digital gold. So for me, I wouldn't give up on it myself. I still think that the fiat currency issue is not going away. The Fed right now is putting up that strong front. Oh, we're going to stop printing. Well, yeah, it's easy for them to say that when unemployment is like 3-4%, right? But ask me this: when unemployment goes to 10 or 15%, are they still going to be like, no, we're not going to print? They're going to print again. Come on.
I think it's important. You made a good observation that in the case of Luna, which got a lot of press globally, it was important for that to blow up, because it actually got some focus within Washington, D.C. on a bipartisan basis on legislation just for stablecoins as payment systems. And so the idea that we can get one bill to actually regulate the entire crypto ecosphere is not realistic, and that's not going to happen. You think about the broad spectrum from NFTs to tokens to various projects, and I always get people to remember when I can is to say to them, Bitcoin is not a coin, it's software. Ethereum software, Solana software, Polygon software. These are software projects that will eventually prove out their merit, or they won't, based on the economics of revenue at some point and all the applications that sit on top of these. So they'll either win because they're good technology, or they won't. And so if you're a venture investor, as I am, you want to take a lot of positions because you don't have certainty in what outcomes are going to occur. You need diversity. But in the case of stablecoin, the opportunity, which is so interesting, is that a stablecoin backed by the US dollar and treasury bills, for example, no different than a money market account, would overnight, if it was passed and regulated, let's just take USDC by Circle, for example, and it was actually regulated as a payment system, that would create a standard of payment backed by the US dollar globally. And what politician, regardless of what state they're in, doesn't want that? It secures a place for the American dollar beyond just commodities of oil and iron and other payment systems that are built around commodities that are always backed by the US dollar.
Honestly, I've never met an emotional investor who ended up making a lot of money long term, right? So that's the kicker, and just always remember that, folks, is that emotion is your worst enemy. You should never fall in love with anything. I mean, listen, a human, okay, fall in love with your significant other, but when it comes to investing, you have to be always very robotic, because inevitably when you put all your eggs in a basket, maybe the first one works out, you make a fortune, but eventually you're going to hit one that's wrong, and you can't let that wipe you out. So, definitely it's a scary thing. I always say to people, like, no investment that you're making is going to love you back. It is just an investment, right? I mean, no, you can't say Shiba Inu loves you. Yet, right. So why would you love it? Love something that can love you back, and no asset you're investing in is going to love you.